the strength of the greenback so important when it comes to Asian assets. And with this Fed pivot towards perhaps a faster tapering, faster rate hikes, what does that mean for Asia?
I think in the near term, we do feel that the dollars will be biased to the upside in the near term, given that we've seen really the revival of the pandemic in Europe, which will likely continue to, give downward pressure in terms of the euro and thereby supporting US dollar. On the back of that, Asian assets will probably going to be pressured in the near term because typically a stronger dollar generally is quite negative or weighs on capital flows within to emerging market, particularly in the Asian region as well. And at the same time, if we look at China, China is going through a softening of economic growth data because of their ongoing regulatory reform on common prosperity, and that's also likely to weigh on the overall Asian assets.
Talking about China, though, the Chinese yuan has been pretty resilient, right? This GTV chart on the Bloomberg actually showing how against a basket of currencies, whether it's the Bloomberg index, we're seeing it at that 60-year high or nearing its highest since inception in some cases. So how much of a shelter does this provide for Asian assets, especially with a strong dollar on the other side?
So I think the Chinese yuan, given where it is today, it does provide a relatively resilient or strong anchor to the overall emerging market space or even Asian asset space. We are also biased towards seeing sustained yuan strength. But in the near term, if you look at how much yuan has strengthened, especially against the backdrop of a stronger dollar at the same time as well, there's a question to how much this strength will continue to sustain. So it's certainly something key that we'll be watching out for over the next coming months ahead. And also, let's also not forget that economic growth is also slowing in China area. And whether is policymakers going to weaken monetary policy, ease monetary policy for that matter, in order to support some of the downdraft in growth that we are seeing is also key to watch. And that might also be a risk to yuan over the coming quarters ahead, and something really key for us to watch in the upcoming PBOC meeting minutes and so on.
When it comes to that Fed taper question, we spoke in the last hour with the Cleveland Fed President Loretta Mester. Take a listen to what she had to say.
Meeting, I thought there was a strong case for tapering at a faster pace than what we had actually announced. And since that time, the data have come in supportive of that case. So I'm very open to considering a faster pace of tapering.
And of course, since the Fed and Jay Powell kind of dug their heels in, we've seen that Treasury reaction, right? 210s flattened the most since the pandemic on expectations of maybe a faster taper. You're seeing 530s down as well to a level that we haven't seen since the pandemic hit there as well. So, as an investor, how do you kind of mitigate the volatility? Do you stay short duration?
Yes, we are biased towards a short duration, given the really pretty decent set of strong economic data coming out from the US. And at the same time, we have also seen in the last FOMC minutes where more of the FOMC members are now biased to thinking that inflation may not be as transitory as they expect, and are now biased towards tapering at a faster pace than expected. But I think I will also stress that typically, if you look across history, the first rate hike generally doesn't derail the market entirely. No doubt, it will introduce some volatility into equity markets or even risk assets for that matter. But the first rate hike, generally market can digest it. And based on analysis, when we look at the past few rate hiking cycles since 1983, we do find that on average, global equities tends to rise by about 7 to 8% post the first rate hike. So the first rate hike is not the end of the world, if I may put it simply that way.
Across the other asset classes, where do you see some opportunities? And particularly, do you see some sort of recovery happening when it comes to the Chinese property sector?
Yes, certainly. I think in the Chinese Asian US dollar high yield bond space, where Chinese issue bonds is a predominant part of that, we do find that there's good, decent value opportunities there. If you look at the overall credit spreads of Asian high yield bond, for that matter, they have risen, and it's now still about more than 1 standard deviation above their historical averages. And at the same time, we've also seen some easing of policies with regards to China. For example, we have seen selective easing in some of the cities on property loan issuance in China. And at the same time, if you look at the last PBOC statement, right, they have basically removed a key sentence there, which which basically says that they are not looking at mass stimulus in the particular statement. So that statement has been removed, and to us, it probably signals a slight shift towards a slightly less tight or more accommodative stance in the coming months ahead.